In today's video, we'll examine increased long-term Bitcoin holding activity and exchange reserve moves. We'll also take a look at institutional investors flexing their muscles and see how that affects the market dynamics. Let's go market. Over the past 7 days, Bitcoin's price has fluctuated within a range of $56,765 to $61,356, reflecting the market's ongoing volatility. However, despite the sharp downturn at the start of August, long-term Bitcoin holders have started accumulating coins once again. According to Glassnode analysts, this trend is particularly evident among large wallet holders, often associated with institutional investments like ETFs. In fact, the accumulation trend score, or ATS metric, which measures market-wide accumulation behavior, has reached its highest possible value of 1.0, indicating significant accumulation throughout the last months. After months of distribution pressures, it seems that a sudden shift has thrown the market a lifeline. Moreover, the long-term holder or LTH cohort, which had heavily divested during the lead up to Bitcoin's all-time high, is now returning to a HODLing strategy. Over the past 3 months, a total of 374,000 Bitcoin has migrated into LTH status, showcasing a clear preference among these investors to hold onto their coins rather than spend them. This behavior is further supported by the 7-day change in LTH supply, which has shifted back to positive territory, suggesting that long-term holders are once again accumulating rather than distributing. Despite challenges, the behavior of long-term holders suggests a high level of conviction in Bitcoin's future potential. The percentage of network wealth held by this cohort remains elevated compared to previous cycle all-time high breaks, and LTH sell-side risk ratio remains low, indicating that these investors are not eager to sell at current price levels. The ongoing depletion of Bitcoin reserves on centralized exchanges, as illustrated by the recent data, ties directly into the broader market behavior highlighted in the Glassnode analysis. As exchange reserves continue to decline from over 3 million Bitcoin at the beginning of the year to 2.73 million Bitcoin in mid-July to approximately 2.67 million Bitcoin currently, this mirrors the trend of long-term holders increasingly moving their Bitcoin off exchanges into more secure long-term storage. As more Bitcoin is moved off exchanges and held by long-term investors, the available supply on the market becomes increasingly limited. On the surface, Bitcoin appears to be stuck in a rut. However, if you look closer, you'll find that long-term holders are engaged in a slow and steady grind, quietly reconfiguring the market's underlying dynamics. Institutional investment in Bitcoin continues to be strong, and Michael Saylor's announcement of a $1 billion plus holding has made headlines. In a recent Bloomberg article, Saylor, the executive chairman and co-founder of MicroStrategy, disclosed that he personally owns at least 17,332 Bitcoin, currently valued at approximately $1 billion. He appears to be a true believer in Bitcoin's potential, stressing that he has not sold any of his holdings and continues to acquire more, describing Bitcoin as a great capital investment asset for an individual, a family, an institution, a corporation, or a country. Highlighting U.S. Senator Cynthia Lummis's proposed legislation to establish a U.S. strategic Bitcoin reserve, which aims to accumulate up to 1 million Bitcoin over time, Saylor underscored the growing recognition of Bitcoin's value at the highest levels of government. Arthur Hayes, co-founder of BitMEX, has predicted that Bitcoin could reach $100,000 by the end of the year. Hayes' belief that ongoing inflation policies would benefit Bitcoin regardless of the US election outcome. Now he extends his forecast in his latest essay, suggesting that the US Treasury's massive T-bill issuance will be a key driver in pushing Bitcoin to $100,000 by year-end. He explains that as the US Treasury issues more T-bills, it will effectively drain funds from the Fed's RRP program, which currently holds a large amount of sterilized money that cannot circulate in the financial markets. By persuading money markets, or MMFs, and banks to pivot into T-bills, the Treasury is poised to supercharge dormant liquidity. Hayes also notes that this strategy is part of a broader effort by U.S. Treasury Secretary Janet Yellen to sustain nominal GDP growth and reduce the U.S. debt to GDP ratio, even if it leads to persistently high inflation. If Hayes' predictions hold true, the additional $301 billion to $1.05 trillion in liquidity expected to be injected into the financial markets by year-end could create a bullish environment for Bitcoin and other risk assets, driving prices upward. As the tides of macroeconomic environment change, Bitcoin stands to gain the most, according to Hayes. In other news, on August 14th, Bitcoin mining difficulty saw a significant decrease of over 4%, marking the 7th negative adjustment in 2024, with the current difficulty now standing at 86.87 trillion. This adjustment follows a drop in the network's hash rate, which decreased from an all-time high of 670 exahashes per second to approximately 622. While transaction fees have reached cycle lows, exerting pressure on miners, the network continues to operate effectively, highlighting its enduring strength even in challenging conditions. So that's all we have for this one. Make sure to like the video and subscribe for more content just like this from GoMining. Anyways, guys, we'll see you in the next one.